All right, also set to be a major week just as far as central bank action is concerned. Three meetings on the way, with rate hikes looking almost certain, at least two of those meetings. Let's get some more detail of what to expect and how it's likely to play out on markets. Pete McGuire joining us from XM. Pete, a very good Monday morning to you. I hope you had a good weekend. So let's take a look at those central banks on the move this week. Certainly we've got the ECB, but also the Bank of New Zealand and Canada as well, likely to move. Why don't we start with what's going on in Europe at the moment? Look, there are a lot of moving parts to this, of course. What's going on in Ukraine, where inflation is going. Complicating the issue, of course, is the French election.
Absolutely. Good morning, Andrew. Yes, I just had a look at the numbers there. Macron's just in front of Le Pen. So no doubt it'll go to a second round or the second session. And I think the fragility across that Eurozone is one to certainly consider. There's no talks yet as far as rate rises on the horizon. Growth expectations in that third quarter are expected to wane. We've got a euro sitting under 109, Andrew, marching towards a 105 handle. I'm not sure whether it'll get there this month, but seems to be structural weakness. US dollar index nearly at 100. So the overall theme across Europe, and roll into that, of course, Ukraine, the ongoing sagas there that don't seem to be letting up. So there's a lot of, I think, fragility is probably not a bad word for the current economic climate in the ECB.
So are you expecting further pressure for the euro then?
I think so, further softness. That US dollar index, I mean, we're off and running this week. We've got, we're the mantra coming out of the Fed and hawkish views from Brainard. So I think, back to backs, you could see, a 1% up by, in the next 2.5 months for the Fed. So that's going to shift the US dollar index. I think some of it's baked in, but I wouldn't be surprised to see a 101 handle, Andrew. We're currently just under 100.
Yep. Okay. Look, we'll discuss what's going on in the States in just a moment. Let's just wrap up that central bank action. Yep. Also got the Bank of Canada.
Yep.
What's it likely to do, do you think?
0.5% rise. It's nearly, well, it's pretty much baked in. So that'll be often, I think, around about Wednesday, I think they meet. So, yeah, it'll knock it from 0.5% to 1%. So, and that seems to be the current appetite across the central bankers. They're not mucking around with a 25 basis point. They're going straight to 50. Obviously, though, I think the Kiwis will probably do the same, Andrew.
Well, speaking of which, across the ditch there in New Zealand, so yeah, maybe 50 basis points, adding to what they've already had 3 rate hikes there. But interestingly too, we're getting evidence that the property market there is down considerably. So would that clearly would be a factor as far as the RBNZ is concerned?
Yes, it would be, and that'll come. And I'm not here to, put any doom on the situation, but I've got a large network of realtors that I talk to internationally, and the softness across the market that's being experienced certainly in Sydney as well. So yeah, that realisation is one to consider. Large mortgages and serviceability, minimal wage rises. So yeah, I think it's going to be a tough time for consumers leading into the end of that tail end of 22 and rolling into 23 with rate hikes from here, Andrew. It's going to really, I think, impact the spending power and how much is left in the wallet and the purse with high inflation wrapped up.
Absolutely, particularly if they're seeing house prices fall, then of course people feeling as though their wealth is being diminished while we're seeing those rate rises as well, inflation rising. So that certainly hurts just as far as their capacity to spend is concerned. Pete, let's take a look at what's going on in the States then. Of course, there's a raft of data coming out. Critically, we're getting further reads on inflation with both consumer and producer prices this week.
Absolutely, and so they just keep on creeping up. And that's, again, high energy costs. We're through the $100 again. So it just creates more hardship for the consumer, Andrew. High food prices as well. Everyone's being, hit on Main Street. So that market sentiment will, I think, start to see. We've got earnings coming out this week. All of those impacts are going to be felt, I think, on Wall Street as far as performance. April could be a little bit of Well, it might just be a little bit of a tough time because we've seen a relatively big move to the downside. If you're looking at the Nasdaq, what you experienced as far as Friday, it certainly wasn't positive, down 1.33%. So I think it's going to be a tough time for equities this month. And yeah, let's keep our hands and certainly on the wheel.
And as you pointed out there, the US dollar index there hitting 100. So are you expecting that strength to continue?
Yes, I am, and I think that there's further upside. I wouldn't be surprised a 101, 102 handle probably by the end of the month. That momentum to the upside, it's been very bullish. Certainly a lot of those rate hikes are already baked in, but I think there's still more momentum. Structural weakness across Eurozone, what happens as far as the elections there in France, the uncertainty with Ukraine, all of those moving parts rolling together, and higher yields are going to push the US dollar up. So great time to be a trader on the Forex market.
All right, Pete, a very different story emerging out of China, of course, because those lockdowns appear to be tightening just in response to the COVID outbreak. And we are going to get a read also on inflationary figures out of China this week.
Absolutely. Very strong yuan, Andrew, what we're experiencing as far as China at the moment. The inflation numbers will be, I won't think that they're going to be surprising. I think they're all conscious as far as high energy costs. We've got Shanghai under lockdown, demand destruction for the crude sector. That's going to be a great concern. So if Shanghai moves to other cities across the Chinese landscape, we're coming into summer. That's a good point. So if we do see other cities fall under the same problems that Shanghai's experiencing, then I think that that's going to really cause concern to naturally the government. And I think the ongoing sagas with the property sector haven't gone away, with the likes of Evergrande and other numerous players falling into that same category.
All right, Pete, and bringing you back home, of course, so the focus this week will be on the jobs numbers. How do you think that's likely to play out, particularly as far as the Aussie dollar is concerned?
Well, as far as the Aussie, we're sitting at that just under 75. So, I'm looking at it that you might see movement. It's going to whipsaw, Andrew. I think you're going to be still between that 73 to 77. I know it's a broad range, but it's going to whipsaw. Strong numbers coming out as far as jobs. Anyone that wants a job can get a job in Australia. I don't know whether you'll get a rise, but you'll certainly get a job. So there's the first part. The second part is where we're moving forward with elections. Well, announcement, we're only probably about 40 days away from, pardon me, a bit further than that, maybe about 40 days. So that's going to be a realisation how the electorate feels towards the incumbents and where we move from here as far as, data points and economic news.